was weird. Alright, now it seems like things are back to normal. Alright. Yeah, that was weird. On my end, it was like doubled up. Like I could hear all the sounds. It was weird. It was like an echo. Doubled up. Like I could hear. But yeah. So yeah, like I was saying, I hope y'all were around to watch the Sunday call, because pretty much everything up until this point has been fruitful. Again, we are inside of a transition period. Again, we are from one quarter to the next, right? So that being said, let's pick back up where we left off. But yeah, if y'all could let me know in the chat if you could hear me okay, that'd be great. Because for some reason, having some technical issues. So yeah, if y'all could be so kind to let me know in the chat if you could hear me and if all the audio is okay, that'd be great. Yeah? Okay, beautiful. Yeah, I don't know what the hell is going on. I have no clue. Alright, perfect. Perfect. Yeah, that was weird. I don't know if it was doubled up on your guys' end, but it was like super loud, like echo on my end. But yeah, so let me get some things situated real quick. So we did have 5:30 news that just came out. So again, we have SMT at the highs here, SMT at the lows here. But again, nothing has changed, and that doesn't hold much value unless we start seeing things continue to promote that idea in terms of something changing. Otherwise, this may be short-lived. Okay, so that's something we're going to monitor up until like the federal fund rate comes out, because again, that can really change things in terms of where the interest rates are going. And then obviously, if you spend any time here watching my content and the things that I talk about, or if you spent like a good amount of time looking into the real intricate details in terms of how ICT studies the interest rate markets and the impact those have on the DXY and the indices, you'll realize just how important this announcement is going to be. Right, so yeah, it's not unreasonable too that there is this SMT going into this new quarter, which is now the fourth quarter. If you guys haven't switched your contract month, you should definitely go ahead and do so, the December contract month, because the open interest on bar chart has changed. Right, for those of you that don't know, like how to observe that, just in case, right? You'd click on the asset here, right? Whatever asset or commodity or whatever you're trying to trade in futures, you'd look at the open interest, right? Once the open interest on the previous month or contract month is expired, which is shown by the open interest being lower than the next contract month, which is December, going into a new quarter, that's how you know when to switch. Okay, very simple. Don't have to overcomplicate it, but that's very important because the previous contract month will look a little different, or will start looking a little bit different as the liquidity transfers into the new contract month. Okay, but yeah, so if you were here on Sunday, you knew, or you should have went into this week knowing that DXY should continue potentially to seek sell side, given the fact that the bonds and yields were promoting that, and they technically still are, unless we start breaking down, possibly getting below this low, off the heels of this SMT, which would then want to push the indices lower versus them going higher, and then obviously that should translate to this going higher, which would then send DXY higher. Again, until that is shown, we're still in the mode of belief, trying to seek this to go lower, also seek DXY going lower, and then watch the indices go higher. Again, these are things that we have to monitor going into this open price, and then obviously anticipate as we walk forward into the rate announcements, right? Because again, that's going to be a very huge impact, because the interest rate markets are the bloodline of the marketplace. Everything is interconnected, and everything in terms of the U.S. assets is impacted by what the bonds and yields will do. All right, and that's one of those elements that brings you clarity, and that's, again, as I mention all the time, all these calls, every single piece of content that we do here is literally trying to assist you in gaining clarity. Because once you have clarity, you then have the opportunity to go into future profitability. Without clarity, you can't be profitable. Without a structured process that you can go in and do on a regular basis, like which is showcased here regularly, you won't be able to be profitable or consistent, right? You have clarity, then you have consistency, then later down the line, potentially profitability. It's a process, right? But first, you obviously have to have organized processes that make sense, right? Like if everything's connected, what impacts that connectivity in both a positive or negative manner? And intermarket relationships, fundamental analysis, which is technically what observing the bonds and yields markets is doing. All that stuff goes hand in hand to help you make an educated, informed decision on what you believe price is going to do within the context of ICT concepts as a day trader, swing trader, any type of trader, right? It's the thing that most people don't do because they just want to look at one market. And you're putting yourself behind the eight ball if you do that, while there's people like me, people like you guys that value the things that we do here, those that really study ICT concepts. There's people like us that take advantage of the actual reasons the market moves in one way or another, right? So with that being said, we're going to continue to observe whether this wants to show any type of strength. Currently, it looks like it's wanting to seek sell side, but we're going into the open price. So we're going to observe and see what takes place once that open price comes out. Obviously, right now, it's starting to potentially give us an idea that price may want to seek sell side here off the heels of the SMT, possibly look to seek buy side here off the heels of SMT at the lows. So that may eventually give us evidence that things may change, especially considering the fact that we're now going into a new quarter, right? Quarterly shifts happen within those early stages of a new quarter, right? Sometimes it's lagged out, but a lot of times, you can get some pretty good information observing things around the rollover period. Like I've mentioned to my private community pretty much the last 2 weeks, the week before, the week of, which is today, like this week, and then the week after a rollover period can generally lead to making things a little harder, right? A little less clear, a little more skewed in the symmetry that's supposed to be in the market when it comes to risk on, risk off scenarios, right? So you want to keep that in mind. Just like we have a particular mindset around specific news events, like for example, federal fund rate, right? The Fed speeches, FOMC, NFP, so on and so forth. Specific characteristics in the marketplace are to be expected around those times, and you have to adjust your approach, right? You can't trade the same as you would on a normal day when we're in an environment that has landmines like those events, right? Or a change in the overall contract month, aka the rollover period, right? These are things that you have to pay attention to and then properly adjust your mindset and expectations. And then if things are a little more difficult, right, or you can't seem to find your footing in terms of what direction the market's going to favor, then that's just telling you, that's the market telling you, hey, for your skill set, for you as the individual looking to trade, you have to probably pump the brakes a little bit and try to find further evidence. Just because you see someone else taking a trade and being profitable, just because you see someone else doing something doesn't mean that you are missing out. Doesn't mean that anything negative should be pressed upon your mindset, right? That's all self-defeating beliefs, self-defeating nonsense that unfortunately we fall into as day traders, right? We all do it, right? It happens to all of us, so it's completely normal. And you just have to get really close with your model and understand what you're looking for, so then you won't feel like you're missing anything, right? I always tell my private community that you tripping out because someone else is making money, or they took a trade and you couldn't take a trade. Tripping out over that is like you getting mad that someone else is making money at their job when you have your job, right? You should focus on your job, the things you do. It has nothing to do with someone else. So just keep that in mind, right? It's I hope it's a simplistic way to view that issue. Some people have those issues, some people don't. Like I personally never had that problem because I could care less. I'm focused on what I'm doing, just as you should be focused on what you're doing. And I hope that you can take pieces from the things that we do here on these live calls that are fundamental, like the analysis I'm talking about with you guys and the analysis that I do on a weekly basis for you guys, and then implement some of those elements into your analysis, we see that there's kind of relative equal highs here. But again, we want to see what price is going to do near this low. We want to see what the bonds and yields are going to end up doing. At the current moment, right, it looks like it's retracing, but we do have that backdrop of that SMT at the lows that could end up being an issue if we start seeing premium arrays get violated. One very significant rule that we use to keep it very simple is a 3 PDA rule, opposed to what direction the market's actually going in right now, or at any current moment. So if price breaks through this swing high, breaks through this fair value gap, and then ends up just slicing and dicing through all these previous ranges, then obviously we could continue to see some type of change occurring. We also have this order block too. So aside from the swing high I just mentioned here, aside from the fair value gap here, right? If we go to the 2-day chart, we also have midpoint of this order block, right? So that's another element, like another PD array or a point in price that could give us some evidence, if it shows zero respect to that this SMT will continue to be valid. We don't pick bottoms and we don't pick tops. We remain in line with the overall narrative that's obvious to us until something changes. Part of that observation in terms of identifying the changes has to do with 3 opposing PD arrays getting violated, which has been mentioned before by ICT himself, but overlooked by many. You don't have to overcomplicate that, right? The higher time frame levels getting broken is obviously going to be more significant than the lower time frame small runs on stops or changes in direction. But yeah, right, everything works inside that higher time frame. So it's not like you want to just disregard the lower time frame delivery, but you always have to keep that in the context of what's happening on that higher time frame. Because if you don't, you're going to miss something, And you don't flip-flop back and forth. Bias can change on a day-to-day basis. Narrative generally will continue to press in one direction. Doesn't mean there won't be retracements opposed to that direction overall in terms of narrative. but those retracements are an example of why bias changes, or how price in terms of bias can change on a day-to-day basis versus the overall narrative that's generally leading one-sided in a particular direction. So that's like a mindset to consider when you're thinking about bias and narrative. Just because there's a retracement doesn't mean that the narrative has changed, right? It could just be a bearish narrative with a bullish retracement, right? So that day or couple days may be bullish, supporting that retracement inside that higher time frame, daily or weekly narrative, right? So yeah, I hope that makes sense, you guys. Very, very important perspective shift and consideration. All right, so yeah, like I said, we're coming off this low. If you look at the 2-day chart, you can see I have that order block labeled. So again, we want to observe what the response is going to be from there. We also have this fair value gap down here. I believe it's a 3-day. Yeah, 3-day. Just got the rest of that 3-day fair value gap. But again, we want to continue to monitor how this rollover is going to affect the market and whether that SMT at the lows is going to be significant. If you look here, you can also see this large wick. The midpoint is acting as support. Okay, we see this overlapping of wicks, which is a implied fair value gap. So that's another area in price that you can observe in terms of whether price can be resisted from there. Is it going to hit that, or even attempt to hit that? And then is it going to go lower from there, or is it just going to slice through? These are all characteristics that can assist you in observing order flow and whether things are changing or not. Okay, so you get the midpoint of the wicks. You measure out both, right? So they're kind of perfectly in alignment, right? So that's a premium array area. We'd prefer, if it's going to continue to go lower, that it doesn't really blow past or close above this midpoint of this wick, and we definitely wouldn't want to see it come up into there. It could, right? But that's something we would rather not see price do. But again, it's been very bearish, so it wouldn't be unreasonable for them to want to retrace, right? Because this is 3, 6, 9 days straight, right? At least from the 3-day time frame, that price has been bearish, favoring the sell side. Okay, so yeah, retracement wouldn't be unreasonable, in my opinion, especially because the rollover period has started, right? We're now in the 4th quarter, right? Just a reminder. So yeah. So we're going to continue to see what's happening. We have SMT at the highs here, right? And we technically have SMT now at the lows, right? So because we have both of those SMTs presenting themselves, you want to be very cautious. Whenever you see price range bound like this on the bonds and yields, generally that's also another factor that could lead to more sloppy price delivery in the indices and the DXY, aside from the rollover period, right? So these are things that you want to keep in mind, because the question a lot of times is, when do I push, when do I not push? Well, this is one of those elements that helps you identify that, along with when price is bouncing around new week opening gaps and just stuck range bound inside of those. That's another factor when you're looking at like the S&P or the NASDAQ, that's promoting the idea that price is stuck, right? It's consolidating, and things are going to be a little bit harder to read if you don't know how to navigate consolidation, which we can get into at a later time. But yeah, so we can now see on this 30-minute that now there's been a smash lower. So let's observe what occurs near the down candles here, right? If it wants to respect that, right? If it stays below this, then that's showing us some evidence the price is going to want to, maybe even seek this fair value gap here, because this would be a run on stops, SMT at the highs, possible shift in market structure, return back to a breaker, right? Also an order block, right? Off the backdrop of that SMT at the highs. Okay. So why are we spending time here? Because once you figure out what the narrative is on the bonds and yields, you have underlying evidence that can assist you in trusting what the NASDAQ and the DXY are going to do, or the S&P, right? Because again, this is the bloodline of the market. This dictates what occurs. And that's another reason why the federal fund rate that comes out, I believe tomorrow. Yeah, it comes out tomorrow. Why that's important. Right? We also have some stuff related to FOMC coming out as well. All right. So we are ahead of that, plus the rollover. So again, you want to be very picky with what you do today. Right? You can see that there's been a shift here, a change in the state of delivery. Right? We got up above this open price. Price wicked down into it, and now we're seeing price have some excitement to the upside. So if you take that information and you come over here, if we can start to continue to see this have strength, that this being the yields, then that'll further support whether we can trust the DXY having some type of significant or more significant run to the buy side, seeking some of these premium arrays. We have this fair value gap. We're going to observe what takes place here, right? And if it just blows past that, then obviously that may translate to us eventually seeing the indices try to fall at some point. But again, nothing has changed yet, right, for the S&P and the NASDAQ. Okay, so again, we don't pick tops and we don't pick bottoms. We remain patient and wait, right? So the open price has came out. Let's actually go here as well and start observing the regular trading hours. We've opened up at a premium utilizing the regular trading hours data. Okay, so we have that as well. So now there's a gap below price. As part of the rules when it comes to navigating regular trading hours gaps, as ICT has mentioned, it's a good rule of thumb to keep tabs on the midpoint of that regular trading hours gap, because even if it was to continue going higher, it wouldn't be unreasonable for them to want to drop lower, especially with DXY running higher, right? That would instigate some type of retracement to the midpoint. And then if it does that, and then we can see some type of meaningful run higher, we now have pretty significant confirmation that it is going to continue to go higher, and there's no evidence yet showing that price is going to want to turn around and go bearish right at that current moment. So yeah, that's something to keep in mind as well. Right, so I want to see what takes place if price can get up into this buy side liquidity. Then I want to see if the DXY is going to continue doing what it's doing. If that does continue to happen, this run higher here will be short-lived, right? And then depending on what occurs at this high, right, at that moment, what DXY is doing, and then what the bonds and yields are showing, that'll dictate whether we could, start looking towards trusting price running above here, taking this, and then maybe trying to seek sell side, right? It is Tuesday, so highs or lows of weeks generally occur 70% of the time on Tuesdays or Wednesdays, right? So you want to keep that in mind as well for the weekly range, because Power 3 is significant all the time, right? If you haven't focused on Power 3 and mastered that, you are highly advised to do so. And if you haven't mastered that and you want to find more information in regards to that, I have a whole 3-part series about Power 3. So definitely check that out if you need some help with that. But yeah, so now we're above this 1 hour fair value gap. Okay, so let's see if it uses that as support alongside this order block that has proven a change in the state of delivery from bearish to bullish at this point. We do have relative equal highs here. We do have a gap up here. So for buy side targets, if it was to continue to favor that, those are reasonable levels. And if you go to the daily chart, you can also see previous day's high here, previous day's high here. We are range bound inside the DXY. This is just a beautiful example of what choppy consolidated bonds and yields does to particular assets like the DXY as well as the indices, right? Sometimes they'll continue to just rage on even though the interest rate markets are consolidated. But again, we're looking for high probability, right? Part of high probability has to do with symmetry in the market, right? Part of that has to do with, if we're trying to be involved in a reliable trending environment, we want to see the interest rates allowing for that type of behavior. Because again, like I mentioned, the bonds and yields are the bloodline, right? You could look at them as the main underlying driver behind why specific assets do specific things. And that's not just my words, that's not just my opinion, that's just the facts. Like I've even heard news outlets that talk about stocks and stuff mention this type of stuff. But a lot of times that goes over people's heads because, most people that pay attention to the news for their information in relation to the markets are generally people that don't day trade, right? Or are just trying to find, what the talking heads are saying so they can go in and lose money, right? So yeah, now we're seeing some more significant push lower. Remember what I mentioned, the midpoint of this, right? As ICT has mentioned a lot, is potentially going to be significant here. We've opened up at a premium given the previous close, which is here at this low of this little diagram thing. And then now here's the high. So since price opened up above, even if it wants to go higher, it's still reasonable for the first opening portion of the range of the New York's AM session. It's reasonable for them to want to seek some type of drop to get down into this level or scoop up some type of sell side to then look to potentially rally up if it is going to choose to do that. Which again, that's the favor until something changes, because again, we don't switch or flip-flop on our narrative just because there's a retracement, right? We have to see actual significant delivery to the downside if we're bullish, and then see multiple PD arrays violated in order for us to fully trust that something is changing from one direction to another. All right, so I do see this equal low here that has caught my eye, right? So I feel like that may present us with something significant. So here we're going to continue to monitor how DXY is raging. It looks like it's really ramping up to the buy side. Looks like now we're seeing some significant excitement to the downside here. Let's monitor S&T. Can't really see much when it comes to these highs. Yeah, not much is shown there. But again, we see how we also have this order block too. Okay, so it seems as though things are starting to favor the downside momentum, right? So we're going to continue to monitor and see how this is going to deliver as well. So it's best to allow the opening range to print. We have macros that we like to engage price in because that's when things are programmed to actually give exciting moves versus getting stuck in consolidation and then later seeing that price went in your direction and you should have just waited, right? So those are some things that you can depend on in terms of timing for particular moves. Just because price is moving doesn't mean you're missing a setup. Right, so we can see too that now the currencies are also somewhat favoring the opinion that price may look to want to seek sell side after it's been so bullish. So yeah, we'll see how the delivery is below this low inside this order block for the currencies, and then we'll continue to see how price responds to taking out this previous week's low. Right, and then we'll see, right? There's equal highs up here too. We did respond away from this weekly fair value gap, which is why my assumption when we started the week was to try to identify reasons to continue to go lower. plus all the things I mentioned about the bonds and yields, right? And I also mentioned a market maker buy model in the indices, which is very much on display here. Consolidation. Okay, price dropped and came off of that low, right? And then now we see that it's just been very one-sided up into the buy side. Of course, again, we're going into the new quarter. We're in the fourth quarter right now, so things could change, right? But again, we have to wait and observe how price is going to react to that rollover. All right. So power 3 also is present when the quarters start as well. A lot of times that can take place. If you go study the 3-month chart, which is the quarterly time frame, shows quarters, right? Each individual quarter. You can look at the candlestick and see power 3, because power 3 is literally just open, high, low, and close, and the manipulation, the accumulation, manipulation, distribution in a particular time frame of reference, right? It's happening all over the place, constantly, right? And if you can get in line with the higher time frame, power 3, then you have some very good insights. Couple that with the bonds and yields analysis, seasonality, the things that we discuss here on a regular basis, and you have a pretty good backdrop and reasoning as far as why you could trust particular things and why we're generally more right than we're wrong when it comes to narrative and where price is headed. All right. So yeah, we got this turn down into this wick here, so we're going to want to continue to monitor how that response is going to be. Is it going to respect that, right? Is this just a retracement to bounce off this midpoint of the wick to then continue to press higher till it takes out further buy side? Or is it going to smash through, maybe get down below this fair value gap, which in my opinion would confirm that we're going to see these lows. But if it stays above that, then we still got some work to do up here. And I'd like to see this continue to rally and try to see some evidence that this is going to continue to go lower. Otherwise, right, we may see some type of change. So yeah, we got the 650 macro that we're going to observe, right? I don't think we're done just yet going higher, but we'll see. And then we have also the silver bullet and then a couple other macros as well. So the macros, another reason why they're important and helpful is because they allow you to be patient, right? They allow you to chill out, right? I say this all the time. If you have issues when you, like, in terms of you getting into a trade, taking a loss, then later on in the session you see price running your direction, consider just trading in the macros. Go look at the times that you are entering trades at, and then try to consider looking at just the macros. There's a couple macros per session. That's all you need, right? You don't need to take 50 trades a day, right? Ideally 1 to 2 trades is plenty. That's 5 to 10 trades a week. And those types of limits are very beneficial. And like I said, the macros are very helpful in putting you in the right position, timing wise.
Nutrish whole health plan.
All right, so but yeah, so let's continue to see what price is going to want to do here. Could be coming off this high here. So we'll see if that's going to be the case. Right, we have dropped. There is S&T at the lows, so that's something that I like. Again, we are still range bound, so we're going to continue to monitor and see if there's something that is blatantly obvious to allow ourselves to participate in. So yeah, we'll see what the response is from here. We are inside of a fair value gap. Right, so if this fair value gap holds, right, that's showing that there's an unwillingness to want to go lower. And it's just a sweep, right? It's just sweeping liquidity. And then especially if we punch through the midpoint here, I could take this off. It's a midpoint of a daily time frame wick, right? Very important pieces to your analysis is being able to observe the wick relationships. I have talked about that a lot here on this channel, but I've also constantly drilled into that in my private community as well. And ICT's mentioned it a whole lot. I think he's mentioned it a couple of times recently as well. The things that he repeats over and over and over and over and over are the things that you want to really, really dig into and lean into. Because there's a reason that it's being repeated. Because it's very important, whatever it is that he repeats. And the wick relationship is one of those things. Alright. So yeah, now we are seeing some type of excitement from breaking off this high here. So you probably hear my stomach growling, freaking hungry. But yeah, so we'll see what happens. We got this down wick here too, so that can also be a potential resistance level. We have set relative equal lows here. Again, there is that 3-day fair value gap that I've had highlighted for a while. So yeah, we're going to want to continue to monitor that. So if we zoom in a little bit, we see that this made a lower low. If we come over here to the currencies, we see that it's made what time frame? So it's 8 hours. Let's go to the 8 hour. It made a lower low. This made a higher high. Right, so there's no cracks in correlation currently between the currencies. Right? So again, our narrative does not change. Like, we don't start favoring sell side unless it's proven. So ask yourself, has anything we talked about amplified the fact that anything has changed in terms of the narrative? No. Right? Based on what we talked about on Sunday, we continue to see, or continue to want to see, price continue to go higher unless something changes, because bias and narrative, or narrative doesn't change like every day, right? But bias can, right? In this case, narrative hasn't changed. We're still in line with price going higher, right? And the bias has also been in alignment with that, right? We are starting to see responses off of that rollover period. The DXY is now punching against what it was doing, which was going lower overall, but it has been somewhat range bound, right? So we're still inside of this range from this low to this high, right? Equilibrium is somewhere in here, right? So if we could stay below this daily fair value gap here, that'd be wonderful, right? It's a little smaller than what I had. Right, so if we could stay below this, that's a good sign for price continuing to go lower. If we could stay down below the midpoint of this wick, that's a good sign. If we could even stay down below the midpoint of this wick, that's also a good sign for price to want to seek this 3-day fair value gap. And then if we could stay below this volume imbalance, which I believe is a new week opening gap, if I'm not mistaken, yeah, that would also be something I'd prefer to see for us to continue to look to sell, right? Because that'll show extreme weakness, right? And then if the bonds and yields can also promote that, that's a beautiful thing as well. Currently, we could see that the bonds are taking a nosedive, right? It's looking like it's responded from that breaker I pointed out earlier. There's a fair value gap in there, and then that order block as well. So this is making me feel like at some point we may see the indices look to favor sell side. We could see that the yields are also looking like they're showing hints that price is going to possibly be changing off the heels of that rollover, plus the SMT at the lows as well, right? I hope you can start to see the interconnectivity related to these assets with what we observe on a regular basis, because it's very important. All right. And let's go back to the smaller. So yeah, now we're seeing that price is breaking down a bit. Right, so now what do we use to map out? Right, like what can we map out to assist us in identifying whether order flow is going to continue? We got this inversion, these up candles here, I believe are potentially an order block. Yeah, we got order block here. So we're going to continue to monitor that, right? And if these consecutive down candles midpoints violated, this fair value gap in here is violated, this swing low is violated, how many PD arrays is that breaking to the downside? That's 3 PD arrays, right? So given the fact that we just identified that, if it does choose to get down below this low, study how that impacts things. Do we end up off the heels of that do we end up reaching down into here because of that, right? That if it does do that, that's a beautiful, beautiful example of the 3 PD array rule in action to help validate or invalidate a particular idea. And then that's also amplifying the importance of the bonds and yields and the impact they have real time in the market as a leading indicator with the DXY and the indices, right? I think I'm going to call this the title of this live stream, Validation, Invalidation, because we're seeing a pretty good display of all the things that we've discussed that relate to that topic, which in my opinion is one of the hardest things for people to get a hold of, you know, not only because of the fact that they got to navigate their mindset, but they also got to continue to navigate the actual technicals that are in the marketplace. So yeah, does everything make sense so far, guys? Just want to make sure none of you guys are lost. We're heading into 650 macro, by the way. So we're going to continue to see what transpires here. Right? I like, if everything continues, I do like the opinion that maybe we set the high of the week. Going into the fourth quarter, everything's been bullish. Seems as though we're starting to see some evidence that price may want to seek sell side for the indices. And we have a logical target, that being these equal lows. We do have a breakdown. We do have SMT between the interest rate markets. DXY seems as though it wants to continue to be strong. So let's observe what happens here with this order block. If I could find it. Right here. Got that 3 PD array rule. Right, got this order block. Right, so let's see the behavior that occurs here inside this area. Again, I'm not here to put you in trades, but you will do what you do based on the things that we identify and the trust that you have in the things that we talk about, right? So yeah, I hope you get the nudge there. So we've got the midpoint of this regular trading hours gap. Okay. So this opportunity here from this fair value gap down into this regular trading hours gap, that's a beautiful framework, right? Absolutely beautiful framework. If you did participate in something like this, you already could have been out of the trade with 5 or 10 points secured, finishing off your day with 7 points below this low, right? So yeah, now we got a fair value gap in here, right? We're below that fair value gap that I told you guys to watch. We did sweep out the low, that I mentioned would indicate that we may want to continue to seek down here. This beautiful structure here, in my opinion, is starting to reveal as a potential market maker sell model. So that's pretty telling. Consolidation, accumulation, reaccumulation, smart money reversal, possible first stage distribution is going to perform somewhere in this area. If we get down below into this area here, that may be our second stage distribution to give us a very fast-paced run below this low, or these lows, if everything continues to shape the way that it's shaping. All right. Yeah, do you guys have any questions? Just want to make sure. I always want to keep asking, because the worst thing we could do is just continue to rant and rave about things, explain certain things, while some of you guys are just not locked in with these specific topics, because then you're just listening to someone talk, and then that defeats the whole purpose of why we're even on this call. Right? Not here to show off, not here to build some type of faunty image. I'm here to get you guys moving, because the world is on fire right now, and it's, the least that traders can do, if they are blessed enough to have acquired this skill set. But yeah, if at any time you guys do end up having a question, just let me know. Something you want to observe here. Let's actually switch to this time frame. We could see that there's a large wick here. So the midpoint of that wick, continue to watch how that's respected. Continue to watch how this fair value gap has now turned to an inversion. We've swept this low, so let's see if we can get some excitement off the heels of this bullish DXY. All right, let's see how that responds. All right, if we go to the NASDAQ, got a breaker here. This last down candle. Let's see how that responds. We are inside of a macro. We punched into the macro and started pushing lower. The DXY has reached into this inversion, also this fair value gap as well, right inside this down portion of the wick. So let's see what the response is from there. DXY raging higher, currencies seem as though they're raging lower. They are just reaching into this fair value gap, so we'll see if that has any type of response higher, or if it just gets slid through, further confirming that sell side is going to continue to be attacked. Bonds are favoring downside for the indices. Yields are favoring buy side for the DXY. So that indicates that we may begin to see some further heaviness potentially. So NASDAQ is coming to a fair value gap. So let's continue to observe how price responds there. Go look at the three indices. There's no SMT at the lows, so that's a good indication that things may continue to fall if the bonds and yields continue to do what they're doing, if the DXY continues to have some strength to the buy side. So we'll see. Because it's a rollover, you can make an argument the price could do either side. And again, the overall narrative hasn't changed to the buy side, but it's starting to signify that there may be interest in us having a quarterly shift. but we shall see. So now there's also something to consider, right? There's a run on stops, shift in market structure, right? So if it was to just slide on through this, an adjustment back in line with the higher time frame narrative is permitted. I would personally like to see if there is reason for us to get lower, but we'll see if DXY wants to cooperate with that because of the bonds and yields, or if this is going to be short-lived and then we just have to adjust and kick back in line with the overall bullish narrative. But I'm at this moment preferring to see if we can try to seek some sell side. Fair value gap. I'd like to get back below this. If it doesn't get back below this, then that's kind of a red flag, especially if we see price dropping in the DXY. That would be a red flag to me. And then if price was to want to punch through this high aggressively, then obviously that would be an early indication that, you know, price may not look to seek sell side. So we want to stay below this area here. We don't want to spend too much time inside this fair value gap. I mean, this last down candle that could potentially provide us with a breaker. Okay, so we do have this down candle here. So if it gets back above that, that's not something that I would like to see. So again, we don't want to spend too much time just hanging around this area here. Okay, because that then may turn us into this just taking the stops and continuing back with the higher time frame narrative. Currently, this is counter trend because, like I mentioned earlier, overall narrative hasn't changed. It just seems as though they're giving signals that it may change. Right, so that would have stopped me out. Right. So yeah, let's continue to observe how this delivery is going to behave. Now, if it was to get back down below here, right, I would then look to potentially identify a fair value gap to then continue to go lower. Right, but right now, if it respects this order block here and does not show interest to push back below this, then obviously there's an argument to then look to attack this high, seeing this as a potential manipulation. DXY is responding from that inversion on the daily chart. So if it gets above this, it may look to use this as support. This is also a bullish daily order block. So let's go back to the bonds and yields. Bonds are still very much dropping off the planet. So yeah, we will now, at this current moment, start to see these invert. Continue to monitor this daily order block level. Let's see if it stays above that, this should end up as a breakaway gap down here. It shouldn't come back down there. And it should now, especially if DXY continues to fall, be allowed to get back up above the buy side here. All right, so I hope you see the potential transition view from one side, right? Me favoring this counter trend sell to possibly look to attack down here and form a market maker sell model, to now, okay, that interest has now been released. Now we start looking at inversions to then adjust, right? We can see this skewed relationship currently, right? It was favoring in alignment with what the bonds were doing, but now it doesn't seem like the indices are ready just yet, right? So the Dow has had a whole lot stronger weakness, and the S&P and the NASDAQ are now just continuing to rage higher. This is an example of narrative not changing dramatically at any small interval of time, right? The narrative hasn't changed. What changes the narrative? Higher time frame PD arrays getting violated, 3 of them, right? And price just breaking market structure, right? Those are the types of things that would change potential narrative. But unless that takes place, the overall narrative doesn't change dramatically. So yeah, we are going to continue to see what happens at this area. The most near-term liquidity is this high, and then obviously the market maker buy model still is in effect currently. Still has some room to go. Maybe we end up getting up here, right? Maybe that takes place, right? But we'll see what transpires. Now, if we were to get back down below this level, this fair value gap, obviously that starts to, first of all, show us that this is very much in a whipsaw environment, which is typical knowing that it's the rollover yesterday. But then that would negate my interest in seeking either overall perspective, whether that's buy side or sell side. But regardless, the narrative, right, something I want you guys to really lean into, narrative does not change just because price retraces, right? Like this was a short-term drop. I did want to see it drop a little further, given the fact that there's an argument to make this look, or put this in the light of a market maker sell model, especially with the bonds dropping the way that they were. But again, the narrative has not changed. So it's not unreasonable for this to be happening right now. And like I said, a response from here was very viable in terms of taking a loss here, right? But then getting back in line with something like this. And so we'll see if we can get up above this high. From this to this high would basically secure the loss that was just taken, right? And the adjustments in terms of, the things that we were looking for real time, I hope that process makes sense, right? 3 PD arrays, the idea between narrative and bias, the difference. Narrative doesn't change quickly or dramatically in a short amount of time. Bias can because of retracements. But yeah, you have to be able to be flexible as a trader. You have to. And the only way that you can be flexible is if you have processes that are repeatable, that you can trust. So yeah, we'll see if this can gain the strength to get above there. I don't like the fact that S&P has been able to get up above it, but the NASDAQ has failed. But you can see that the Dow is really aggressive, right? Things look like they're still continuing to amp currencies dropping and reacting off that fair value gap. DXY is now coming off the high here after hitting an inversion. So yeah, there's another response off that order block on the daily. Right, if we go back to the daily chart, you can see what I'm mentioning there. Right, you can kind of see also in this example the importance of that higher time frame identification of particular PD arrays. So order block respected. See if this order block's respected. Get us up above here, and that would be enough, right? If you took it from here, it's a 40-point move. The loss that would have been taken here would have been half of that, right? Taking the potential sell here from this fair value gap. Trying to aim for the lows, that gets violated, taking the buy then back in line with the overall higher time frame bullish narrative to get up above the highs here inside the elements of a market maker buy model we identified on the higher time frame, right? The whole process hopefully makes sense, right? So yeah, we'll see if this will allow for that. Right, we do still see heaviness in the bonds, which is definitely something that can lead to an issue later for any type of buy interest. And then this going higher, right, if that continues, definitely jeopardizes DXY trying to seek sell side, right? But yeah, we'll see what transpires. But yeah, now we're getting close. So we ran up inside that 650 macro, right? Offered a drop, right? But then it shifted market structure here, broke up above this high, assisting us in validating that this was not going to be a very strong sell or valid sell. Now you can see that this is very heavily manipulated, right? Came down, stopped out an opportunity there. And so this one ended up in a break even for me. So yeah, right? Sometimes it'd be like that. And you could see that just the wild behavior here. That stop raid right there, that run on stops, may end up being the catalyst that then pushes price up into here, right? The biggest moves come off of stop runs, which is why that's one of the first things you want to look for. That's why ICT mentions that. Because that means that work has been done, right? And then when price does accelerate, you already know work has been done behind you. Yeah, now we're range bound, right? Like I mentioned earlier, when the bonds and yields are range bound on that higher time frame, generally that can lead to an issue. Technically, we are in a range-bound environment here between the bonds and also with the yields. And so that's why, or that amplifies the fact that things like this, right, these very choppy, stop-run, high-resistance type of behavior will take place. It's generally one of the factors. So put that in a notebook, right, or wherever you take notes, make mention of that. So yeah, we're back inside that 1 hour fair value gap. We'll see if he uses that as support now and turns it into an inversion, or if it just slides on through it to then allow the indices to complete their market maker buy model. So we're back inside that order block. We're back inside that order block on the daily. We've already taken out stops there. So we got the DXY dropping. NASDAQ is the indice that is definitely the lagger. And it hasn't been able to get up above that high. So it's kind of interesting. If we come over here to the S&P, we see the midpoint was attempted, like I mentioned. So we didn't pull up the regular trading hours gap for this. Yeah, you could see how the regular trading hours gap was there too for the NASDAQ. Came right down to the midpoint, a little bit beyond it. See what happens. We've now kind of stalled out. So Still believe it's going to run up above those highs. Very, very choppy morning. But we're still respecting this order block high. Now we're at the high of the regular trading hours gap. So let's see if it'll give some type of reason to get up above here. See if it can respect this inversion fair value gap here. But yeah, because we're bouncing back and forth, we're kind of gravitating back to the middle of the range. It's very, very much low probability, very high resistance. So you don't want to do anything stupid. But yeah, we painted out a lot of things today in terms of coming to a reason to think a particular way. We kind of discussed validation, invalidation. We have discussed adjusting, right? At first we were looking for this fair value gap to hold, possibly give us some type of further sell side, because what the bonds were doing, the bonds were tanking at that time, right? So in conjunction with that, right, we could see how price dropped, right? But we'll see now, or then eventually we saw it break above this, saw it respect this order block here, and then we see what the result was. We got up above there. I said that order block there could push price higher a bit, possibly get us up here. It did push up, but then it came right back to the equilibrium point of the current range, right? When price bounces around equilibrium, aside from the other things I mentioned earlier that instigate consolidation, when price dances or comes really close and gravitates around that equilibrium point in a given range, that's also promoting the fact that we are consolidating, right? We are watching the interest from this daily bullish order block. Narrative has not changed from bullish to bearish yet, so I still favor that this should be able to continue to seek higher prices. Took one loss with this sell, trying to aim for a little bit of deeper sell side delivery. Then it came all the way back to where my stop was at, which I pushed at to break even, which ended up getting stopped out. So today is a small losing day. Right? And again, we went into the morning knowing that the rollover generally could lead, the week before, the week of, the week after, could generally lead to more sloppy conditions. And guess what? That's on full display, right? The behavior between the bonds and yields going into, say, the currencies, DXY, and the indices, I hope that today also added another layer to your understanding of how important that relationship is. And so we'll continue to observe this. Seems as though this may be a retracement, optimal trade entry. But again, we are dancing kind of close to that equilibrium, and it is range bound, right? So the Dow's running, so maybe this is a six sister, right? Meaning that it'll catch up eventually. We'll see. So I still believe this daily bullish order block may be significant. So we're going to continue to monitor how this holds and pushes price. So now we're coming back up. See if it returns back into this order block. See if that pushes it again. There's now a fair value gap there, right in tune with an order block and a daily order block. So that may be a catalyst to get price up above these highs. Run on stops. Probably on the seconds chart, there's a shift in market structure somewhere in here, in line with this context. And then DXY is falling, and now we see a pretty strong push. Right? So the lack of being flustered, the lack of scrambling around because I took a break even or a loss, that's something that took years, you know, because if I was the way that I was 4.5 years ago, I wouldn't have even considered trying to participate. Right? And yes, there's an entry taken. So yeah, we'll see if that wants to hold. We got this order block here too. Okay. If it was to break down through the midpoint of that wick down below, then that would be an issue. I think I'll just secure, how much is that? Yeah, we'll see if it can stay above this order block. If not, we'll take that and then just call it a day. So yeah, very, very sloppy delivery. So DXY is kind of going higher. See the yields coming off that run on stops up here. Still got SMT. Still showing potential interest that things are possibly going to change. So that may be what's occurring here. The rollover may be preparing for a change overall in narrative. Sometimes it takes a little time though for that to take place. Doesn't just overnight. I mean, sometimes overnight it'll change, but sometimes it builds up and then aggressively runs off of the heels of a news event, like the news that we're going to have tomorrow in terms of the federal fund rate. We do have SMT at the highs. Okay, SMT at the highs. NASDAQ being weak. S&P and the Dow showing more strength. Let's see what this wick does. So midpoint of that wick is going to be significant. It's going to have a response from there in conjunction with this order block in order to trust price running up. Right. So if it doesn't do that, it'll likely be another break even, and that will pretty much cap the day for me. And then we'll be back on Thursday, live here, but live again tomorrow with my private community. So yeah, we have to stay above that midpoint. If it does not stay above that and breaks through that wick, midpoint, the low, as well as the fair value gap and the order block, then that is a permissible break even. You don't got to worry about anything. You could just see the back and forth movement. Price is unwilling to favor anything at the moment. And just gravitating back to equilibrium. We are a little bit above it. But yeah. So yeah, that will pretty much wrap it up. Ended up hitting me at a break even. Yeah, we got that fair value gap, order block. I just don't trust that something reliable is going to take place here. There was a run on stops. There was a shift in market structure here. Fair value gap here. Lower fair value gap. If you are following the YouTube model rules, your stop would have been below this, right? I ended up putting my stop above this fair value gap, trusting that this wick would potentially hold, possibly giving us some type of push higher. Obviously, that didn't happen. I was not willing to allow it to go to a full stop. So we are at 2 break evens and 1 small loss. Let's see if that's going to respond there now. Wouldn't be surprised. Yeah, so let's see if it respects that. All right, we have another wick to watch now. Just that wick. Notice how it's interesting. The midpoint of that wick is at the high of that daily bullish order block. Right? You could just notice the very strong retracements. Right? That's indicative of a high resistance environment. And then again, just to make sure no one misses it, we are in the rollover period. The week before, the week of, which is this week, and the week after generally can present us with this high resistance behavior. And then you see the bonds and yields, right? They're still range bound. They are kind of showing interest. In this case, for the bonds to go lower, interest for the yields to potentially go higher. But we'll see what happens after tomorrow, because that's the federal fund rate announcement, right? Apparently there's going to be cuts. Cuts to the interest rates are bad for the indices, stocks as a whole. And then obviously it's been bullish going into the fourth quarter. We've been bullish off the heels of a federal fund rate that's potentially going to cut rates. That's kind of giving you, X-ray view of what could potentially transpire. That's why this morning I was really interested in trying to see if we had interest to try to take some counter trend sells, which then obviously went against us earlier, right? Then took another one, adjusting back in line with the overall higher time frame narrative, which is bullish. That was short-lived as well. Came back, hit me at break even. Then we took this one as well, trusting that this wick would hold and possibly at least get us up here before it ends up trying to drop, given the weakness that was kind of shown in the DXY. And then again, that came down, stopped out at break even, didn't allow the full stop out. And you can see that adjustment was something that was a very good move, right? So 2 break evens, 1 loss today. That's how it's going to be sometimes. But yeah, right? We know why, right? We understand the conditions that led to that. because that first sell was counter trend, because what I mentioned earlier many times, how the overall narrative doesn't change and we don't pick tops, the risk is cut in half when we're counter trend trading. So that was only 0.5%, right? Versus a full 1%. So the loss in the two break evens is very easily shrugged off when you understand the different conditions that we're trading in. And some people may think, oh, this is a boring topic. Well, guess what? You know what else is boring and is extremely frustrating? Constantly losing and beating yourself up. When there's very logical things to consider and different logical ways to adjust, versus beating yourself up thinking that you can't do this, or some wild thought process. But yeah, so now we see price giving a turn, finally beginning to favor this large potential change off the heels of this bearish S&T. So yeah, now we also have S&T at the highs here. So now obviously things, in my opinion, may end up justifying this fourth quarter quarterly shift. So we'll see what takes place going into the federal fund rate, and then what that response will be. So yeah, I hope you guys got value from today. A little bit shorter video. I mean, you can clearly see that things are very sloppy. We did already participate, and that ended up not being fruitful. So given that that's the case, I think we'll call it a day. We will be back here live on Thursday for YouTube, and for my private community, we will be live tomorrow. Watch this down candle here. It may end up acting as a bearish breaker. Okay. So yeah, with that being said, you guys, I hope you guys got value. Thank you for participating and coming to see what this channel has to offer, and I will see y'all on the next one.